I have been in the bullion industry for over 5 years. And during that time, gold has gone from 2,500 Australian dollars per ounce to 5,400 Australian dollars per ounce. I have been both a customer and a seller, and I'm going to use my half decade experience to explain to you exactly why gold and silver's prices are completely irrelevant and why you worrying about locking in the best price is a complete waste of your time and energy. I'm going to be using historical examples as well as some deductive and simple reasoning to tell you exactly why you shouldn't even be thinking about the price. I'm making this video so that people understand the correct reasons why they are investing in gold and silver, so that you don't experience any fear or sadness if prices change in the opposite directions. I believe that if we manage our expectations, we can better manage our actions in the future, and that you can behave more rationally if you understand the correct reasons for investing in precious metals like gold and silver. This is because the majority of people have a complete misunderstanding of why you should invest in precious metals like gold and silver. If you don't know me, my name is Steph. I'm from lfaos.com, and what we do is help people, businesses, and super funds invest over $50,000 into precious metals safely, securely, and more importantly, legally. I make these videos for everybody else under the $50,000 threshold purely because I want you guys to be more likely to buy into such great assets like gold and silver safely, and so that you don't get scammed. Now, probably the biggest reason why the price is completely irrelevant is this entire notion of you're trading paper. Money intrinsically isn't worth anything. And the money I'm referring to is the money you know and use every day. That's actually currency. Currency is worth nothing. The only reason we say it's worth something is because we say it's worth something. It is by decree. The government has decided that this is worth 50 units of itself. It's completely fraud. There's no backing, nothing. So all that is required for the system to keep going is blind faith. Once that blind faith in the currency completely vanishes, the currency will become what it actually is worth, which is nothing. So if you've got this one asset which has an intrinsic value of zero, and you can trade this asset, which is worth nothing in real terms, for another asset which has been money for thousands of years, which has been the main reason of all wars throughout history, gold and silver, as well as land, right? But mainly gold and silver. If you can trade between a worthless asset and something that is worthwhile, why would you not do it? At any price, at any price. If I can trade something, if I can rip a note, posted note, and then give it to somebody and get gold back for it, I would do that every day of the week. So eventually, I believe all arbitrages have to close. There's no such thing as a permanent arbitrage because eventually buyers and sellers will close the gap. I believe that there's an arbitrage right now where you can trade something that's worthless for something that's worth something, something that has real value. And eventually, throughout history, like all other currencies, the currency will fail and the arbitrage will close. Eventually, gold will be worth infinite of our currency purely because the currency has failed. It's not that gold is going up, it's that the dollar is going down. We've seen gold's history, especially in the last 20 years in Australian dollars, go from $700 an ounce all the way up to 5,400 in 20 short years, right? I've been alive for 23. In my lifespan, gold has gone from $700 an ounce all the way up to 5,400 purely because more money has been printed into circulation. Do you think that this is going to stop? Do you think that the government, the central bank, and especially the commercial banks will continue or will cease to stop loaning money into existence? I don't think so. And I don't think it's going to happen because the system now relies more credit to pay off the previous loans and the previous interest. And it needs it at an exponential rate. So they need to issue more loans at a larger amount through time in order to pay the previous loan off, including the interest. So eventually, it'll get to a point like Weimar Germany, like Zimbabwe, where the currency completely fails. In Germany, in Weimar Germany, The husbands who were working during the day, if they got paid in the middle of the day, they would hand their paychecks to their wives in order to go spend on groceries, because the prices would be different at the start of the day as opposed to the end of the day, and they would increase rapidly. It's called hyperinflation, when the currency rapidly loses its value, and everybody in the economy slowly realizes that the faith I've put in this government for this currency probably isn't so well founded. Eventually, it becomes more useful to use the currency as kindling and firewood rather than as a form of payment. Keep in mind, if you can trade something which has no intrinsic value for something that has all the intrinsic value in the world, I would take that trade every single day of the week, regardless of price. And it has proved wonders in the last 20 years. And I think it will continue to prove wonders in the next 20 years, because I do not believe, especially with the current system of fractional reserve banking, that the outcomes of the future will be better than the ones of the past. I think it will continually get worse. So if you would like to protect yourself from continual inflation by central banks, by commercial banks, and by your government, who is wanting to secretly tax you and pretend like nothing is going on through the means of inflation, then invest in gold and silver. Protect your wealth. Trade an asset that has no value, no real value. Just because we say it has value doesn't mean it actually does. Trade an asset that has no value for something that does have value. Another big reason why the price of gold and silver is completely irrelevant is the notion of counterparty risk and wealth outside of the system. For example, if you buy an ounce for $5,000, it's going to be an ounce in 1,000 years. You could leave it in a spot, provided nobody touches it and moves it, it's going to continue being an ounce of gold for 1,000 years. Everything else is completely denominated in dollars. When we think of prices, we think in dollar terms. In the case of gold and silver, you need to start thinking in terms of gold and silver, especially for prices of everything else. Silver is a great way to start pricing things, because when money was beginning to become into circulation, the modern money we know, the currency that we know today, the paper money and the bank deposits that we know electronically, when it started to become into circulation, it was as good as gold. You'd store your gold at a bank, which was a gold storage facility, and they would give you a note saying that you had this much gold at the bank, and eventually people started trading those notes. Those notes were as good as gold. Eventually, it lost its peg and it became solely just a fiat system of blind trust. If you have an asset and you can buy an asset which precedes all form of paper currency, I would highly recommend it regardless of price. Everything else is completely denominated in dollars except for gold and silver. It's the other way around. If you want to see how much purchasing power you've lost in the last 100 years, pull up a chart of gold in American dollars or Australian dollars and then invert it. That's how much purchasing power you've lost. It's not that the gold value has gone up, it's that the dollar value has gone down. Money is gold and silver. It has preceded all modern notes today. The only reason that we can use these notes today is because everybody is ignorant, and they have been consoled and lulled into ignorance by central banks, by commercial banks, and by governments in order to better control them. Because if I have a slave who is blindly working paycheck to paycheck, too worried about making ends meet as opposed to questioning his own slavery, I've got a slave forever until the day he dies. I know that's a huge side note, but you've got to understand, you don't need to price things in dollars anymore. You need to start pricing things in gold and silver. When you make this switch, you start to realize how the financial system works, because all of your models, all the financial models that people use now are based on dollars. When we start to use financial models on gold and silver, we can start to allocate resources in the economy a lot better, because you can factor in a better depreciation of your dollar, which is completely represented in all models, especially when it comes to asset returns, which have been overinflated purely because the dollar's gone down in value. Your metals are not tied to anybody. Everybody on the planet can go bankrupt and your metals are still yours, provided you've got them in your hands and they're in your storage. So the entire world can go bankrupt. Every government, every central bank, Every commercial bank can go completely bankrupt and your metals are still yours. Your deposit in your bank, regardless if it's insured or not, I promise you, is not yours if the government goes bankrupt. Because if the government goes bankrupt, the currency fails. We lead to hyperinflation. A great example is if you've got $200,000 in your bank and the currency fails, that $200,000 isn't worth shit. It's completely worthless. $200,000 of what? Zimbabwe dollars? It's not worth anything. Do you know what would be worth something? If you had gold and silver. If you had gold and silver in your possession, that's always going to be worth something. So if I can buy an asset that is going to continue to hold its wealth, irrespective of what everybody else does, it's a fantastic asset, regardless of the price. I don't want you guys to think in terms of dollars. I've bought gold at $3,000 and now it's $5,000. I've made a profit. No, you haven't. Gold has stayed the same. The dollar has gone down. You haven't made a profit. You've preserved your wealth. And you've done it in a way where it's nobody else's liability. And that's the important part. When you start to think like this, it becomes a whole lot more simple and the price is completely irrelevant. You bought an ounce of gold and it's an ounce of gold today and it will continue to be an ounce of gold tomorrow. If you keep your dollar in a bank account, it's worth $1. Next year, it'll be worth 96 cents of the same dollar, considering time and inflation. This is why we buy gold and silver. You buy an ounce, it's still an ounce later. Eventually, like I mentioned before, all arbitrages close and the currency will eventually be worth nothing. So if you want to preserve your wealth and have it in a form where it's nobody else's liability, buy gold and silver. You don't have to buy it through me as long as you've got a little bit of your portfolio allocated to an asset where it is nobody else's liability. You will be sleeping at night so much better, I can assure you. The biggest expectation that I want to give to my customers that work with me, especially with high amounts of funds and money, is that gold and silver are like insurance. They're absolute insurance against systemic collapse. This whole illusion of buying this asset low to sell it later for a profit is a complete misrepresentation of how this asset should be handled. I believe that every human on this planet should have a portion of their wealth in gold and silver, not to make money. I believe that they should have this portion purely because it is insurance. What you're essentially saying when you've got this portion is, I don't trust everybody else. I'm going to buy gold and silver because everybody else may go bankrupt. The government may misbehave. The banks may misbehave. The central banks may misbehave. My debtors and creditors may misbehave and everybody goes bankrupt that way. I'm going to buy this asset, which is outside of the financial system, which has no ties to anybody whatsoever, purely because I want some wealth that is mine and mine alone. This whole illusion of buying an asset low to sell it high is a complete farce. It's not real. The asset remains the same. This is why pricing in the economy has become so bad, purely because we have been so ignorant to rely on a currency which is worthless. The whole financialization of everything to make a profit, to buy and sell in order to make a profit, has completely calcified people's minds. It doesn't produce any goods or services. I'll use a Greek example because I'm Greek. Spartans used to use long iron rods as currency. And you're probably thinking that's a giant pain in the ass. Yes, that was purely the purpose. It was used in order to minimize the buying and selling of assets in order to make a small profit here, make a small profit there, to close the arbitrage and constantly make money that way through the buying and selling of assets. I think it's disgusting. I don't like it at all. So when we buy gold and silver, and what I tell my clients is, and the people that work with me, is that the expectation I want to set is that you're going to buy this asset, you're going to leave it, you're not going to think about it. It doesn't exist anymore. It's yours, it's nobody else's liability. You've got 10 ounces of gold and 100 kilos of silver. You've got that amount of wealth, irrespective of the price. The price could go to $1 each. I'd be dancing in the streets if it did, because I would put my life savings into it, which I already have. I would get into debt to buy it. I would never recommend that for any of my clients. Don't get into debt because that's a form of slavery. I'm only joking, obviously. What I typically see, because price action on the exchange, what you see with the charts. Now, if you want to go and view a chart, you can visit alatheos.com. I've got the charts listed there for free in a simple way, especially for beginners to be able to view the price of gold. And you're going to need it for this example that I'm going to mention. So head to alatheos.com and you can see what I mean. When we're talking about the price, it's based on behavior and expectations. It's not based on the rational value of an asset. So when I have clients, gold will go up, say, from 1,000 to 1,500. At 1,000, the same client was saying gold's too expensive. I don't want to buy it. It goes up to 1,500, and then they say, oh shit, I should have bought when it was 1,000. Damn. All right. What I'll do is I'll wait until it hits back to 1,000 so I can buy it again. It goes down to 1,250 and they go, oh, see, I told you, gold really isn't worth anything. I told you, it's a scam. And then from 1,250, it goes up to 1,750 and then keeps continuing up to 2,000. And then that same client says they missed out. It's based on behavior. And this has happened hundreds of times. When I talk to clients and they ask me, oh, I'm going to think about it, what I tell them, not because I need the sale or because I want their money, but purely because it's reality. If you look at the Australian dollar chart of gold, it's bottom left to top right. In your case, in your guys' viewing, it's bottom left to top right. It's a straight line, if not exponential. When I talk to clients, they say, oh, I'll have a think about it. We never want to make impulse decisions, but they say, I want to think about it. And what I tell them every time is every client that has told me I'm going to think about it and then not call me back until a year's time, the price is higher. Every single time. Look at the price chart. Every single time. Gold's gone from 700 an ounce to 5,400 in 20 years. Every time. The value of gold, again, is not going up. It's the dollar that's going down. Do I think that gold has become magically useful? No, it's a pet rock. It's real money. It's the perfect currency that God made for us, that we're supposed to be using. To be concise, don't think about the price that you're buying at because it's based on human emotion. The chart is based on human emotion. I get clients that call me up and they go, oh, do you reckon the next 3 months it'll dip? Do you reckon there'll be a dipping opportunity where I can buy in? And I tell them every time, mate, listen, just dollar cost average and then don't think about it. That's it. Buy all in one lump sum at the start. Don't think about it. There's more to life than trying to secure an absolutely perfect price in gold. There's hedge fund managers getting paid millions, tens of millions of dollars in order to try and figure this out to make an extra % return. You're not going to beat these people. It's not possible. Dollar cost average, if you'd like, or buy what I recommend, what I purely recommend just because it makes your life 10 times easier, buy all at once and then forget about it. And then in 10 years, come call me. It's as simple as that. Don't overthink it. You don't need to waste your time and you don't need to waste my time about if there's a local top or a local bottom. Who cares? Who cares? Stop thinking in terms of dollars, trying to buy an asset for this price to sell it later for this price. Who cares? Buy an ounce of gold because it's an ounce of gold. Buy a kilo of silver because it's a kilo of silver, not because the price has gone up in dollars. That's completely irrelevant. An absolutely fantastic way, especially for my Australian audience, to better explain what I am talking about in this video is with property. Most people in today's economy don't care about the prices of property. They don't think about it every day. It's not something where you can look at the chart and then constantly see buyers and sellers, an order book of buyers and sellers and the spread in between, like on the exchange for gold and silver. And this puts people's minds at ease. But keep in mind that those same people have used 20 to 30 times leverage, depending if they're a first home buyer or not, 20 to 30 times leverage in order to buy an asset that they're praying goes up, that somebody else is willing to pay more for it later down the track. Because of how illiquid the market is, people tend to think and not worry about it as much. This is actually a disadvantage for the market. If you've got an asset which you have 20 to 30 times leverage on, especially in a 30-year loan or a ridiculously long loan without a locked in interest rate, A variable interest rate that can change on the whim of the guy that's running the central bank, the RBA, the Reserve Bank of Australia, on a whim to affect the cash rate. I don't comprehend why people are not more conscious and evaluate that opportunity more. So you're telling me I can walk up, sign this, pay 30 times leverage for an already overvalued asset in order to have a liability which I don't even know the interest portion of. I don't know what the interest rate's going to be in 5 years. I couldn't tell you. It's incredible. The banks love it. It's their best product. The Australian dream, the American dream, where you buy an asset. The purpose they do it is because it's their most profitable product. I know C-suite bankers. I know people who know C-suite bankers. And all of them say they would never get a mortgage. All of them. Every single one. Right? They understand it because they work in the industry. But they're willing to sell those products to make a buck. All power to them. I'm not going to stop anybody from making money. What I sell, I'm invested in. It's all I've got. There's nothing else. I put my money where my mouth is. So when you've got an illiquid market like housing, it's very difficult to buy and sell. There's loads of fees. The realtor's got to get his commission. Everybody's got to get their commission. With gold and silver, you can see how much it's worth, right? Even in illogical terms of the currency, and you can sell out instantly. We've bought the bullion dealer that I'm affiliated with bought 1.2 metric tons of silver at once. Bank transfer, same day. Immediately. We vet, we make sure, take the ID down, done. Here's your money. Check all the bars, test them all, done. Same day. You can't do that with housing. It's not possible. It's just not possible, especially with all the fees and the spreads involved. And it's done on purpose because the government doesn't want you to revolt against them. Because if you've got an asset which is extremely valuable and a loan against it and you think you own it, you're much less likely to revolt against the government. And the banks love it because they can charge you a disgusting interest rate. They can create this money out of nothing, which is not linked to gold anymore because it's harder to loan out when it is. They can give you this loan and create it out of nothing and then charge you interest for the service, the wonderful service of generating computer digits on a screen. So when we compare two different markets like gold and housing, gold is denominated in dollars with the modern perception of people, right? They think gold is denominated in dollars. It's the other way around. The dollar is denominated in gold because gold has preceded the dollar. Housing and the prices of houses, although they existed before, the current value is denominated in dollars and loans, financial products, mortgage-backed securities, which caused the 2008 financial crisis. These products and these loans allow people to buy assets which are overvalued, to get into more debt, to raise the prices further. Now what they're doing is governments are incentivizing it and creating artificial markets. First home buyers. Oh, you only need 5% down. It's ridiculous. It's an artificial market. It's not meant to exist because it's not a financial product that anybody would sign up for if they had any rational mind or if prices were realistic and based in gold and silver. So don't fall for the hype, this whole idea of housing. I'll never outright buy a house unless I've got enough cash to buy it outright. And even then, it's still a stupid decision because the prices are so inflated. So when you can buy an asset which is nobody else's liability and it's not reliant on the system to keep issuing more debt, it's a far better asset because there's way less risk. There's always going to be risk, especially with the irrational price that you see on the chart. It could dip down to zero. It could dip down to one. Who knows? But that's a random price on a chart. The gold is still yours. When the housing market crashes and nobody's willing to buy because it requires a very little amount of buyers to step out of the housing market in order for prices to tumble extremely because it's such an illiquid market. Prices will fall tremendously and it'd be difficult to get the cash, especially if you need it suddenly. You'd have to sell it for a huge discount to current prices. I just think gold and silver are a better asset. And I don't see why anybody would sign up for a product where you don't know the interest rate for the next 30 years. It doesn't make any sense to me. I hope that example, although slightly a bit to the side and unrelated, was able to show you why I believe the prices of gold and silver are completely irrelevant. Remember, like JP Morgan, I've got a poster up there for JP Morgan's on my wall. He's probably not that great of a guy, but this quote is perfect. Gold is money, everything else is credit. And I would slightly tweak that. Gold and silver are money, and everything else is credit. I hope you enjoyed the video. If you would like any assistance with purchasing anything over 50 grand in precious metals in Australia, head to alatheos.com and I would be happy to help you out if you needed any guidance on how the process works in order for you to do it safely, securely, and more importantly, legally. If you're looking to invest under the $50,000, head to the bullion dealer that I'm affiliated with. They'd be happy to help you. Enjoy the rest of your week. Have a great day, and I'll catch you in the next one.